Hello everyone, I am Chemose. Yesterday was a day full of contradictions for the markets. On one hand, optimism came from companies' profits exceeding expectations, while on the other hand, renewed US-China trade tensions and the uncertainty created by interest rate cut expectations. In short, investors were quite confused. Let's take a snapshot of this complex day together. Let's first look at the undisputed star of the day, namely gold. As you know, gold is a safe haven that investors turn to when market uncertainties increase. And yesterday, that was exactly the case. The spot gold price rose by a strong 1.6%, reaching 4,209 ATH, and even surpassed $4,230 during the day, setting a new record. So, what drove gold to these new heights? The answer lies in three main factors: the Fed's interest rate signals, escalating US-China tensions, and of course, investors seeking safe havens amid this foggy atmosphere. From a technical perspective, staying above all major moving averages suggests that the next target could be around $4,350. While gold is shining so brightly, the situation in the stock markets is a bit more complicated. The markets are caught between the good earnings reports of companies and the worsening macroeconomic news. Looking at the US side, we see that the S&P 500 closed the day up by 0.4%, and the technology-focused Nasdaq 100 ended the day up by 0.7%. The biggest drivers behind this rise were the better-than-expected profits of giant banks like Bank of America and Morgan Stanley. Even United Airlines' positive future forecasts and Apple's new product launches supported this optimism. However, sharp fluctuations during the day clearly showed how trade tension headlines shook the market. In Europe, the Stoxx Europe 600 index rose by 0.6%. While luxury stocks in Europe are saving the day, we also saw energy giants like Total Energies rise due to improvements in refinery margins. This shows how layered the picture is. So, what about Borsa Istanbul? We saw a 1.44% reaction in the BIST 100 index, and the index reached 10,464 points. However, we should not be fooled by this rise, because we must remember that the index has still lost 5% since the beginning of the month. The picture remains quite fragile. In conclusion, yesterday the market told us a clear story. Investors are still playing for growth by buying shares of solid companies, but at the same time they are adding record-breaking gold to their portfolios as a hedge against the storm. This dual game is the new normal during periods of uncertainty. We will continue to follow the markets for you. Don't forget to follow our channel, like our videos, and turn on your notifications. See you.